So here's what we know about getting rich. Invest your money in reliable assets and let it grow over time. It sounds so easy, and yet it's one of the hardest things to accomplish in life. Because we don't just want to get rich at all costs. We want more money, but we also want peace of mind at the same time. Those two things don't always go together. You can have so much money you never have to worry about paying the bills and still be terrorized by anxiety about losing that money. We should prosper financially and mentally. When your finances are solid while your mind is peaceful, that's true wealth. When you no longer solely rely on working to earn money, when your money compounds on its own in the stock market, that's when you can finally liberate yourself from the trap of exchanging your time for money. While the economy keeps growing despite cataclysmic events, and as a result, the market keeps going up, there are a few challenges when it comes to successful long-term investing.
Many of us recognize that having exposure to the stock market is a good way to build wealth. The problem is that investing in stocks is difficult because the market is so volatile. Prices constantly go up and down, which plays into two powerful human emotions, fear and greed. We feel fear when the market is going down. We get greedy when the markets start going up and feel the urge to pour our life savings into the market at once. This dynamic has been magnified in public markets since 2020. Since the COVID-19 pandemic, trading stocks has become more popular than ever. In 2011, individual investors made up a little over 10% of total trading volumes in the stock market. By the first quarter of 2021, it was nearly 25%. But markets have been more treacherous. One way to measure volatility is by assessing how often the S&P 500 makes at least a 1% move in either direction within a single day. In 2022, the frequency of such swings for the S&P 500 had been more than 87% of trading days, a rate previously observed only during the height of the global financial crisis of 2008. Another measure, the CBOE Volatility Index, or VIX, which measures the market's expectation of near-term volatility, has remained elevated from February 2020 all the way through early 2023. All of this is to say, volatility is high, which makes the market seem erratic. If you try to react to the daily changes in stock prices, either you will lose money or you will stay on the sidelines. You will be successful if you maintain composure in spite of the fluctuating nature of the market.
Challenge number 2, consistency. Picking the right investment strategy is hard. You have literally hundreds of thousands of options to invest your money. Most stockbrokers offer the ability to buy stocks and commodities from all over the world. As I'm writing this, there are more than 59,000 companies worldwide that you can invest in. Then there are countless other investment vehicles, like ETFs, mutual funds, bonds, and commodities such as gold, silver, copper, and cryptocurrencies. What's more, there are thousands of experts who predict all kinds of events in the economy. There are people on social media who have been warning for a decade of a total collapse of the dollar. Our world is getting faster, louder, and more chaotic, which is only overwhelming us. We can't distinguish what matters from what doesn't, and what's true from what's not. And if we do try to invest in something, we're distracted by the next best thing that comes our way. We try too many different types of strategies, which prevents us from ever being consistent. Successful investing comes down to tuning out irrelevant information, having the strength to stick to your strategy, and resisting the urge to follow other opportunities. Challenge number 3, prior losses. Losing money in the stock market is common. Studies that look into the success rates of those individual investors who are highly active show that only between 1 and 3% make money in the short term. It's hard to imagine that up to 99% of all traders lose money, but I'm not surprised. Every person I've spoken to who ever tried their hand at buying and selling stocks has lost money. Trading stocks for short-term profit always sounds great. Who doesn't want to make money with a few clicks on their stock trading app? But by the time people find out the odds are stacked against them, they have probably already lost enough money that they are fed up with stocks. What about the pros?
About 80% of professional money managers underperform the S&P 500 index. This is why so many people have a bad experience with investing. The odds are you've lost money by investing too. And I know from personal experience that when you get burned in the market, you would rather stay away. But you also realize you're missing out on free money. That's essentially what investing in stocks comes down to: putting your money into the market and waiting until you get rich.